Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of water management with Badgermeter's latest report. This report is supposed to be dry, but get this, it actually has some surprising news. Let's see if the numbers tell a story of growth or just a lot of, well, water under the bridge. Badgermeter just filed their 10Q, which is basically a quarterly checkup with the Securities and Exchange Commission. It covers the first 3 months of 2025, giving us a peek into how the company is doing. In short, it's a financial report card. Badgermeter is a company that's all about water management. They make and sell meters, sensors, and software that help water utilities and industries measure and control water usage. They are not your friendly neighborhood plumber. Think of them as the brains behind the city's water system. Let's dive right into the heart of the matter, the financials. We are going to look at some numbers to see how they're doing. First off, cash. They have about $131 in cash, which might sound like a lot, but last year they had around 295 down, 3 million, 5 money, 5. Dotty just aren't bringing in as much money. Keep this in mind. They made a big investment or they just aren't bringing in as much money. Keep this in mind. Now let's look at receivables. These are the payments that are expected to come in. Their receivables are $111, $9 million, up from $84.3 million at the end of last year. What this means is that they are selling more stuff. Now take a peek at the other side, liabilities and shareholder equity, which are how the company is financed. Their liabilities are around $257 and million in comparison to $214 last year. That's quite an increase. Moving on to the income statement, which shows how profitable they are. Their net sales, which is all the money they made from selling stuff, is $222.10 and increase compared to $196 and $3 million expectant $3 million from last year. That's really good. But what about how much it cost them to sell that stuff? Their cost of sales is $126 and $120 million last year. This also increased, meaning that it's becoming more expensive to create their products. This isn't necessarily bad if they are earning more, as we saw in the increase of the net sales. At the end of the day, after paying all the expenses, including taxes, the company ends with $38.44 million compared to $29.20 from the prior year. This is good news. Next, we are looking at the cash flow statements, which shows where the cash came from and where it went. For the first 3 months of 2025, they had about $33 million in cash coming from operations, while a year before they had $21.5 million. A solid improvement, but they spent about $184.9 million to $9 million in acquisitions compared to the previous $3 million. That's a big number. It's basically all of their cash. The company also spent $10 million in dividends to shareholders. The summary? The company has $131.41 in cash versus $199 million from last year. The biggest change is the huge acquisition. The statement of shareholder equity is a bit boring, but here we go. This statement shows the changes in the value of the shareholders' stake in the company. At the beginning of the year, the total was around $606 million. They made about $38.4 million. This increased the total value. The company paid cash dividends. This reduced the total value. The summary at the end, the total shareholder equity increased from around $606.62 million to $641.7 million. They are doing well. Okay, let's dive into some of the fine print. This section is mostly about how they put together the financial statements. Basically, they are saying they have made their best guesses on some numbers. This section gives a little more detail on specific numbers. For example, they explain what they consider to be cash equivalents, short-term investments. It's good to know these types of choices. This section dives into some complicated accounting stuff. I'll simplify. It deals with gains or losses that aren't yet realized in the company's income statement, like currency changes. Here's an important piece of information. On January 30, 2025, they bought Smart Cover Systems, a company that makes sewer monitoring equipment. This cost them about $184.94 bond. This cost them about $84.924 million. That's a pretty big purchase and helps explain the cash spent. This section is like a what could go wrong checklist. They talk about potential lawsuits and environmental issues, but nothing major seems to be brewing. This just describes what Badgermeter actually does. They are mainly in the business of water management solutions, selling to water utilities and other commercial and industrial customers. This is all about how they count their sales. When do they say, okay, we made money? They break down their revenue by where it came from and when the goods or services were delivered. Let's zoom out and see what the overall picture looks like. Overall, we have seen that the net sales increased, but let's zoom out on what management actually said about it. They mainly sell to the utility water market, where they provide smart metering solutions, which is around 88% of their sales. They also sell into the flow instrumentation product line, including the industrial market and water-related applications. This is about 12% of their sales. The company acquired select remote water monitoring hardware and software. The total purchase was $3 million. This has helped with their goals to improve the company's performance. These are the results of everything we have said before. Overall, things are looking pretty good. Increase in sales, increased profitability. Of course, we need to take a look from a wider lens and see what the world is expecting from them. Now, let's take a peek at some of the risks. The management does not feel that there have been any material changes from the risk factors disclosed in the company's annual report on Form 10K. So if you want to know more, you can check it out. We might make a video about that in the future. So what's the bottom line on Badgermeter? From just a quick glance at the filing, things are looking pretty good. The numbers are up, which is always a good sign. But, and there's always a but, they are going all in on the water sector. They spent a lot of cash to purchase a company that goes in alignment with that vision. This has a great upside, as the sector is expected to grow quite a bit, driven by regulations and needs for improved water management in big cities. Their biggest increase was due to water-related markets, with a lot of decrease, due to de-emphasized non-water applications. Their expenses also increased, so something to keep an eye on is that they do not drop profit margins. The acquisition cost them a lot, so it remains to be seen whether it was worth the cash they spent and how fast they can get a return on that investment. So overall, I'd say Badgermeter is heading in a decent direction, but there are definitely some things to watch closely. Thanks for watching Corporate Decoder. If you found this breakdown helpful, be sure to like, comment and subscribe for more deep dives into the world of corporate finance.